Let's see how the day goes in terms of flows. What you're seeing right now is some profit taking in the sectors which have gone up a lot. So a bit of churn in portfolios is happening. So ITC is down 3% today. It's a clear indication, I mean, if you needed one this morning, that people are just swaying away from their defensive tilt a little bit and trying to look at sectors which might deliver more alpha if the Nifty were to climb higher from here. And it's because that of the fact that FMCG and IT actually account for a significant part of the Nifty's weightage, that it's pausing at a 5640, 5650 level. I think today is going to be quite important in determining whether the Nifty actually respects this 52-week high so far and does a lot of work around here and then waits to hear the political noise from New Delhi with the deadline and what kind of give back the government has, and whether we can progress with what the market's been quite excited about over the last few days. So I think the news from New Delhi is important. During the course of the day, the RBI news is of course important in determining whether we can progress further just today. But I guess the important part of trade today is the change in stance that's going on between defensive and less defensive sectors, because now people seem a bit more inclined, having seen policy in action thaw, to take a little bit more risk. But Gautam Trivedi of Religare has joined me to talk about that. Gautam, morning. It's been a terrific run the last few days. What would you be telling your clients now in terms of approaching the market?
I think let's look at a bunch of things here that are happening. I think there's obviously a potent mix of QE3, sudden reforms, and the fact that the VIX is at a 5-year low at 15.4. So I think we clearly have all the ingredients for a big rally. Question is, how long does it sustain, and what are the other issues that are still to come? I think let's look at one at a time. If you look at the diesel price hike, that brings in about your under recoveries to about 20,000 crores, which in the big scheme of things, when the fiscal deficit's at 5 lakh crores, I think that number obviously is minuscule, but it's a significant step, which until recently the government had shown no interest whatsoever in trying to reduce it. I think this was probably one of the largest concerns, if not the number one concern among FIs and domestic investors, on how exactly to tackle the problem of the fiscal deficit. I think the government's taken a baby step towards that. Hopefully we'll see more coming over the next few weeks. So I think it's a bit of a wait and watch. I would not advise people to rush back into the market. Of course, some of the names that have opened up high today, for obvious reasons, FDI in retail, FDI in aviation, those stocks would obviously go up. But I think we've got to wait and watch and see what are the next steps from the government. I think also with respect to QE3, if you look at the previous 3 easings, and I include Operation Twist within that, the first QE1, which kicked off in November 2008, had a rally in both the emerging markets, India of course, and the S&P. But the subsequent easings actually did not result in any major rallies in emerging markets, including India. So I think keeping that focus in mind, you've got to be careful about what the QE3 means for emerging markets and India this time around.
So if this is a sentiment plus liquidity-led tactical rally, what do you tell your investors to do in terms of approaching it? Do you ask them to take profits in certain sectors, and what kind of names would you advocate them to play it through?
Yeah, yes, I think profits in the FMCG and pharma clearly, I think, is recommended at this point, because if you look at the FMCG space, the stocks kept hitting new highs. A lot of these stocks are even now trading way beyond our 12-month target prices, and hence it was difficult to explain to people why these stocks were moving up. But I think that the real reason really was the fact that there were lack of options, and investors preferred to stay closer to defensives and safer bets versus getting adventurous. So now we're telling investors, probably starting this morning, to book profits in both these names and look at stocks. For example, Jindal Steel and Power, stocks that are down as much as 40 to 45% caused by a specific event. And I think now is a good time to look at some of these names. We also continue to like cement. We have over the next 18 months 11 state elections, and of course demand supply dynamics are clearly in favor of pricing. So we continue to prefer Ambuja, Ultratech, and also recommend 2 mid-cap names within the cement space, Shree Cement and JK Lakshmi Cement. The other space we like a lot is media, and that's obviously benefited from Friday's news on FDI in retail, and hence we continue to pound the table on both Hathway and Dish TV.
Any expectations from the Reserve Bank today? Do you think they can add to the cheer, or is that expecting too much?
He's expecting too much. I was referring to the potent mix of rally. Would be phenomenal if that were to happen, but I think let's get realistic. Given last week's print of 7.55 plus the diesel price hike, which will probably add at least another percentage to the WPI, very unlikely that the RBI will do anything major today.
Stay on, Gautam. We'll come back with many more questions. So far so good, you would have to say 56.40. Sure, because IT and FMCG has not delivered this morning. You're not seeing the Nifty progress beyond that initial 1% gap. But you put the last couple of days together, you're talking 200 points on the Nifty, and those are gains which need to be digested, and that's perhaps what the Nifty is doing this morning at around that 56.40 mark. Hearteningly, the mid-caps are not doing too badly. In fact, the mid-cap index is up as much as the Nifty is this morning, which is good, and the breadth is quite positive, 740 to 270, so no problems there. We'll slip into a quick break. It's still very exciting for many sectors like aviation and retail, and we'll talk about that when we come back.